And welcome to another episode of the Bandit Room. My name is Charles, joined in the studio today by Caleb.
Hello.
Thanks for joining us. And our special guest, Mr. Jay Rinehart.
Yeah, thank you for having me.
Thank you. Now, Agie is notably not in today.
It's a second absence.
I
think Charles and I have perfect attendance records. But,
That's true. Not me. You have.
Oh, no, you don't.
You're number one.
Ha.
Very nice.
Any guesses as to why Agie might be out of the office since he's not here to defend himself? We can just have wild speculation.
I don't know if there's any movies filming right now. Maybe he's in a movie.
He's on an island somewhere.
Took up water skiing.
Yeah, could be. You never know. Well, we'll find out. Mr. Rinehart, so you've got a long history with knowing Agie and Span Enterprises now. I feel like we're old friends at this point. Particularly since Aggie's not here to defend himself. Why don't you tell the story of how you guys got to know each other?
Sure.
So, and Agie can't correct you, so you
That's
can
right.
say anything you want.
He can't correct me. We've enjoyed being friends. Our friendship started with just some ideas regarding some different internet-based companies. With both Agie and Naga's background and with Span's success in this area, we just had some different ideas that we threw around, created a group called Second Brick Ventures. And we have, one product that we've been developing. It has had some success, but not phenomenal success. So we're not overnight, internet success stories. We've also had the opportunity to help start the local chapter of Venture South. So those are early angel seed investments for accredited investors, and that has had some success. Matter of fact, it spawned a group in Charlotte that they were working to establish.
Gotcha.
We helped establish it here, and the interest got there, and they didn't want to drive to Rock Hill, so a lot of those guys stay in Charlotte. And then, of course, that group has grown now to, I believe, 460 members.
Wow.
So
Wow.
making a huge impact in the angel investment in the Southeast.
Wow. And that's just your side gig, because for most
right.
people who know you, the president and CEO of Rinehart Realty Corporation. Give us a backstory. So, it's obviously the company has your name in it, so you've been with it for a while. Tell us about sort of how is your day divvied up between that and your other responsibilities? Because you've also got Rinehart Law, you've got other sort of companies under the Rinehart umbrella.
Sure. Yeah. We're a 47-year-old real estate brokerage company. We started as a brokerage company in the back of a grocery store on Cherry Road.
Nice.
When my mom and dad first were running the grocery store and found that really they wanted to go after their dream, which was having a real estate company.
Wow.
Rock Hill certainly was not what it is today back in 1976.
Is the grocery store still there?
The building is still there. It is not a grocery store anymore.
What's the building?
I don't know who the current tenant is.
Gotcha.
I'll have to look next time. But we actually lived above the grocery store in an apartment.
Oh, wow.
So kind of neat. They formed the company when I was 6 years old and had wonderful success the first year. They really, filled a niche in Rock Hill, had some great ideas, and the company took off from there.
Yeah.
We've never wanted to be just a massively huge real estate company. We want to be a company that has really competent, very highly ethical brokers that are very efficient and work at this full time. So right now we have about 75 brokers that work with us. Wow. We also have a property management company where we manage about 1,100 rental units. Mm-hmm. We also have a homeowners association management company where we manage somewhere around 4,500 doors.
Wow.
In 38 neighborhoods. We have a construction company, and then, of course, I have the law firm.
Yeah.
So I spend my day doing a lot of different things. Matter of fact, I was just a few minutes late to record this because I came right out of a closing with a long-term client.
Okay.
So did that this morning. I spent teaching real estate.
Yeah.
So, it really depends on the day.
So your day's all different no matter what.
It is a lot of fun. It's very difficult to explain what you do and to explain to your spouse, to my kids, hey, how was your day? Well, I didn't do the same thing all day today in any way. And not only that, today was very different than yesterday. So it's something that I thrive on and enjoy and have been doing for a while.
Awesome. Any particular tips for managing all of that, keeping everything straight when you've got so many different hats to wear.
Yeah, Agie and I have actually talked about this because, as you know, y'all run a lot of different products, and one of the things that we talked early in our relationship about was the fact that if you hire really good people around you and that you are fair to them, that you establish a good team, the team actually does carry the entire product, company, you name it. So we have some really good people, and we take very good care of them. And then they also understand that this is not a short-term gig.
Well, that makes sense. You take care of them, they'll take care of you. Well, let's talk housing a little bit. What's your take on the current situation? I know, last time we had you on here, you had a good line about how the housing market is not, a national thing. The housing market is very local, and I think that's a very true statement. Can we talk local and national? Where do you think we're going?
Yeah, I'll give you another statement that you'll probably love. Is you cannot day trade real estate. So, when people we're so used to, and we hear every single day about the stock market. The stock market is up, the stock market is down, it did this. I mean, if you follow it all day long, it's like riding a roller coaster. The real estate market's not like that. People buy a house. Number one, it is an incredibly emotional investment. It's your house. It's where you're going to raise your children. It's where you and your spouse are going to spend your time. It's, and people are there now for an average of 9 to 10 years. So you don't trade these things a lot. It's also, and this may be a little controversial, it's not an investment. What investment do you ever make that you have no return from? Right? I mean, your house that you live in, the return is you don't have to pay rent.
Okay, yeah.
Okay?
Yeah.
So, I mean, we've come up with this idea that it's a phenomenal investment. Well, it is in the things you can't quantify. In the things you can quantify, we have to have appreciation for it to be an investment. And locally, over the last 2 to 3 years, we've had phenomenal appreciation. Before that, a lot of people didn't pay attention to the fact that Fort Mill in a 3-year period had 14% appreciation every year.
My goodness.
And we kind of went, oh, that's an anomaly. That's Fort Mill. Well, now the whole market does it, and everybody goes, whoa.
Yeah. Your house is getting better returns than any stock portfolio in general.
And usually it's the largest investment for most people.
That's true.
Now, you're
getting it on leverage most of the time.
Most of the time. Now, you do end up with some interesting things. So we'll talk nationally. It's so funny to listen to people, or to see the headlines, I should say, that say, oh, sales are down 16.2% or whatever it is today.
Sure.
And you start to look at, okay, that's 16% off of one of the highest volumes of houses being sold in history since we've been keeping up with it. So we're still going to sell nationally probably about 5.4 million units this year. Wow. Well, when you sell 5.4, and one of the highest years is in the low sixes, it's still a good year.
Right.
Okay. Now
we're losing. It's all perspective.
It's all perspective, and what ends up happening is people look and say, oh, that's down. Where are all there are 1.7 million, almost 1.7 million members of the Realtor organization. That's a lot of realtors in the United States.
Right.
That do about 95% of the real estate transactions, but still, it's just a lot of them. I do believe what's going to end up happening is you're going to have less realtors. The ones that do business are going to continue to do business because life still happens. People still get divorced, they still get married, they have babies, they have multiple babies. They have parents that need to move in with them, move out. I mean, those are all life changes that don't stop just because interest rates go up. So nationally, I think we're going to continue to have a strong real estate market. Now, because of the supply and demand, or I should say the lack of supply and the exponential demand, we're still going to see increases in prices. Even with interest rates going up, because historically over 40 years, the interest rate has been in the high 7s, low 8s. Well, we're at 6. So historically, we're still low interest rates. We're just not historically low, which is the 3s and the 4s.
Gotcha. So it's hard to judge it when you've been in an era of historically easy money, I guess.
For a long period of time. So this is not just like, guys your age, I'm a little older than you. Guys your age, looking, the vast majority of your time as a professional has probably been spent in very low interest rate environment. Mine, it hasn't been. This has been an anomaly over the last 10 years.
Gotcha. So if you've got your locked-in rate at a favorable number, you're going to have to hold on to that for a while.
Well, and people will do that. That's another problem on the supply and demand.
Oh, right.
So I mean, think about some
if you're thinking about
people,
changing,
right? Younger people that have been, maybe they bought a little bigger house, but they're going, okay, we could really go down in size. But if we go down in size, we're paying twice or more in the interest. Why would we do that? Let's just stay here.
Right.
Yeah.
You also have a lot of the baby boomers aging in place. They don't want to go to a facility. They don't want to go to a 55-year or older community. So,
well, there's more trends than that too, as well. I mean, there's home health has become bigger than it ever has been, as far as that goes. So, it makes it easier for somebody to stay in their house.
Right.
So the last time we had you on, or I was not here, so you were on the Bandit Room.
Sure.
Was 2017.
Caleb was still a kid at that point.
Yes, I was a tiny child. But you've gone into it a little bit, but so that was 2017 compared to now in the last 5 years. Are there big things that you're seeing in terms of changes or whatever? Yeah.
Well, do you want me to talk locally or nationally?
Let's focus locally, I guess, on that.
Sure. Okay. So locally, we really have seen just a massive amount of people come into our area. We were already starting to see and become a destination, but it was almost like it was just Fort Mill. You know, Fort Mill, if you can throw a rock and hit somebody from New Jersey or Ohio. Now you come across the river into Rock Hill, and they were like, oh, wait, I could go to Rock Hill and buy something for half of what I would pay for it in Fort Mill, and it takes me 10 minutes to get there. Okay, I'm going to do that.
Right.
So people found Rock Hill. Also, just for some reason nationally, and I don't know if it was the announcement of the Panthers, some other announcements that occurred around the same time about LPL opening up, being here, just some of the neat stuff that has happened in York County. All of a sudden we started really having a lot of people from Southern California looking. And if you draw a line from where we are in South Carolina across the United States, you come to Southern California. Pretty nice weather.
The same climate.
Okay, same climate. Yeah. And they go, okay, so the ocean's on the wrong side. No problem. I can live with that. I'm still 2.5 hours from great shoreline. I'm also 2 hours from the mountains where it's 15 degrees cooler. So we've just had a lot of people come in, look at quality of life. And the crazy thing is they'll sell a 1,500 square foot house for $2 million in California.
Right. Come
here and buy a 4,000 square foot house for $800,000.
Right.
Then they buy 2 more rental properties. Because they've got the cash.
Might as well, You've got the capital to do it.
Yeah, so that's different. So what's changing our local market is we hadn't had that influx of capital. It had been people that had to get a mortgage, had to do this. Now we've had just a massive amount of cash pulling in. We haven't even seen the impact of that, in my opinion, on the local economy yet. Because a lot of those people still, the work from home craze phase that came out of COVID. Because remember, since 2017, we've had this weird pandemic that none of us had ever lived through. And it changed because of technology, everything we do. So we've got people that, my favorite, a young couple comes to us and says, we want to live somewhere near a NFL franchise, NBA franchise, NHL franchise, and somewhere where we have good quality of life. So we looked at it, and there were like 3 places in the entire United States we could go, and we didn't want to be in the major city, so we chose Rock Hill. Said, okay, great, what do y'all do? Well, we both work remotely, so we have to be within 45 minutes of an airport so that he can go to Chicago, I can go to New York, and we can be there in 2 hours. I'm like, wow. I don't know how many places there are in the United States that literally foot that bill.
Wow.
So it's pretty cool.
That's wild. Very specific, yeah.
Well, it's interesting. You mentioned all the sort of net migration that we're experiencing in the Carolinas, because I was looking at it, and I want to say it was 25 states actually had net negative population. It's mainly the larger states, New York and California, like you were mentioning, of people. I'm sure the pandemic had an effect on it. Probably exacerbated it, but like you mentioned, the higher cost of living in those environments definitely played a role there. Where do you see that nationally playing out? Do you think we're going to see a continuation of that going forward? We're going to keep seeing people sort of go where it's where they're seeing new opportunities?
Yeah, there's been an interesting net migration that has been accelerated into the southeast.
Right.
So while we're a growing area here near Charlotte, really you can go all over South Carolina, even in the rural areas, because there's also a push into smaller towns that can redevelop their downtown. Maybe not like we've seen right here, but even down to a Clover, some of the smaller areas throughout. I believe, that we're going to continue to see that.
Yeah.
We are going to continue to see it mainly because people are choosing their lifestyle. That's something that came out of the pandemic, where we were cranking pretty hard in 2019. Almost everybody I know, it was not unusual for the lights to be on at 7:00 at night, especially in the fall.
Yeah.
Getting stuff done. And now, especially when we're hiring talent, they're looking at, okay, when am I expected to be there? I'll be glad to take phone calls afterwards.
Yeah.
I just won't be in the office.
Right.
And you see people saying, okay, well, are you true to your statement of a work-life balance? And if you're not, then you're not going to keep talent very long.
Yeah, that's true.
And this is talent that is, again, moving from other parts of the United States. So it's not local talent that we've always had. Yeah. We are getting some good talent from out of the area, which helps our businesses.
Interesting. Since interest rates are in the news a lot right now, I believe just today they announced another 75 basis point rate hike. Would you mind talking a little bit about how that essentially affects the market? I mean, it's causing the cost of capital to go up. So obviously it seems like getting a mortgage and things like that are going to be a little bit more expensive as long as they keep this interest rate increase going.
Sure.
Remember
what they're increasing is the short-term interest rate. So mortgage rates are not based on the short-term interest rate. They're based on the T-bill.
Gotcha.
The T-bill is more based on risk in the marketplace. So if we have a flood in the T-bills, guess what goes down? The rate. So in a risky environment, then you may have some money that floods off into very safe investments, especially if they are returning a little bit higher, but again, not 6%, 3%, 4% numbers. When you start talking about interest rates, remember, I think we mentioned it just a little while ago, that the 40-year norm is closing in on 8%. So Powell has said, I really think the interest rate should be about 8.25% on mortgages.
Yeah. Wow.
So Fed chair's already said, hey, this is where we think the market needs to go, and they're going to use their powers essentially to manipulate. Again, not in a bad way manipulating, but inflation is still going up. They've got to curb inflation.
Right, yeah. So they're just going to keep turning those rates up until they break something, you think?
That's the way they normally do it.
It's gonna be?
I think historically that's what they've done, and then they start to pull back.
Right.
I've heard everything from pullbacks in mid-23, third quarter 23.
Yeah.
But again, they've got to do things to pull capital out.
Right.
I think there's just been a massive amount of cash on the sidelines. People made a lot of money. It was not unusual for us to sell a house where somebody may have doubled their money because they lived there 10 or 15 years. Then they would go in and buy another house and leverage. They wouldn't put all that money into the new house.
Right.
So they've got the cash on the sidelines either to pay off other debts or literally to have cash on the sidelines.
Yeah.
So that then, and like we've been talking about talent, sometimes they take the cash on the sidelines. Hey, why don't you stay home for a little while? Well, stay-at-home dad, stay-at-home mom, either way. Or why don't we not, you don't like your job, so let's stop and let's take 3 or 4 months and let's figure out a new job.
Gotcha.
Did you know that the IRS now requires all tax-exempt organizations to e-file their 990 tax forms? If you need to file a 990, check out expresstaxexempt.com, the quickest and easiest way to e-file your organization's 990 forms. Express Tax Exempt offers interview-style and form-based processes to accommodate 990 experts and newcomers alike. Plus, they make it easy to attach any required schedules, share the return with others in your organization for review, and they even offer live customer support. So go to expresstaxexempt.com now for the easiest 990 e-filing option.
One thing that's not in the news as much right now, but something that's intrigued me, is the idea of the fact that the U.S. population is somewhat in decline. Population growth is at almost an all-time low. Immigration is also at a low. What's that going to do to things like housing in, say, 20 years' time if these kind of trends continue?
Sure.
If the boomer generation is exiting, say we're 20 years down the road, put that nicely.
Yeah.
And we've got a declining, people just aren't having kids as frequently. A lot of that is economic decisions, that people are making. People are just seeing it as a choice now, whereas people, generations ago may have just seen that as the next step, logical step, and people are really weighing their options.
Well, Charles, we've been through this,
Yeah.
believe it or not.
Yeah.
How big is the X generation? It's half the size of the boomers.
Uh-huh.
So the boomers didn't have a lot of kids.
Right.
So it's only the late boomers and my generation that turned around and said, oh, we don't want just 2 kids. We want, I have 4.
Right.
And a lot of my friends have 4. I mean, it's crazy. Well, we did the millennial and the early Z's generation.
Yeah.
Well, now those kids are coming out, and it's interesting to talk to my 4. I've got 1 married, 2 engaged, and then my son is happily dating.
Yeah.
So each of the 2 engaged girls have said, we want big families. My daughter that has our current granddaughter has said, we only want 1 more.
Okay.
So out of 3 girls, I may end up with, if they like big families, each one of them have 3 or 4.
Yeah.
But Ashley and Bryson will just replace themselves.
Yeah.
Right? 1, 2,
Right.
2 kids.
Right.
We will see what happens with John David.
Yeah.
But they are all in that late millennial, early Z. And I do think that, we could have definitely a lower amount of people being produced in the United States, immigrating to the United States. But I don't think that's a permanent thing. We seem to fluctuate as through generations.
Sure.
Now, what does it do for housing? The interesting thing in the housing market is we're behind about 5.5 to 6 million units in production.
Right.
That's why we have the increase in prices, because we have more demand than supply.
Right.
Well, that does not include all of the Z's that are in college. That doesn't include, the kids coming out, which it's interesting. And I shouldn't say kids, young people coming out. Some are kids, they're still in high school. But as they're coming out, it's not like they're sitting back going, oh, I'm never going to buy a house.
Right.
The question I get asked is, okay, now how does this work? Higher interest rates, I'm being told that I may not be able to buy a house, yet I got a $90,000 starting salary. How does this work? And I go, oh, no, we can buy a house.
Yeah.
We're not going to buy a $500,000 house.
Right. Right.
But we can buy a really nice house. So I do think you're going to end up with continued demand in the real estate market. I think that's going to continue even if the boomers end up aging in place, but then of course they will exit at some point in time. A lot of those houses, you're going to have the X's come into them, but we have a lot of millennials. A massive amount of millennials that really do want houses that will be move-ups, because you'll have the Z's move into their house, they'll move up into the boomers, and again, you got to think the X's are in our prime earning years. If you look at kind of how your career goes,
right,
and I jokingly, when I do generational training, I talk about the X generation. I explain it this way: they're just pissed off.
Yeah.
They just are, because they're not big enough to make an impact.
Right.
Digital was actually the X generation's idea. They just weren't big enough to do it. So, and all these things, and plus the 80s, 70s, and 80s were a great time to grow up.
Yeah.
How do I know that? Well, the millennials and Z's are playing our music, and all of those bands are still touring.
That's true.
So you think about that, and you have this generation that's just not big enough to make an impact financially, size-wise.
Sure.
But at the same time, they are the ones that are basically the voice in the ear of the millennials and the Z generation. And there's the ones that are still saying, there's a lot of wealth in real estate. Don't just rent.
Right.
Don't just rent. Look what you're throwing away.
Right,
Let's look at the cost of buying that house. And so now there's a lot of them are sitting back going, oh, wow, can I buy a townhome? I don't have to buy a 3,000 square foot house. Can I buy a townhome? Then I don't have to cut the grass, because they hate cutting grass. Not all of them, but a lot of them.
Sure.
So, anytime you talk about generations, you're talking them big, talking platitudes. It's,
We're speaking
70
in
million
generalities,
people. It's very general, because there's some phenomenal entrepreneurs, some phenomenal inventors in every single generation.
Oh, sure. Yeah.
Well, you had talked to me about, maybe talking about first-time home buyers.
Yeah. Let's talk about that, because it's so hard right now for a first-time home buyer. You're entering this market when everything seemed like it's been just year after year of hot markets, and getting harder and harder to get that first home.
Yeah. So, the biggest impact on first-time home buyers has been the student loan debt. A lot of them have come out with massive student loans, and I don't know of a way to solve that. I don't think it's getting rid of all student loan debt, because what that burdens the rest of us with is unpalatable.
Right.
It would probably be unpalatable to those people too if they realized the impact of their taxes in the future.
Right.
Now, if you then turn around and say, okay, can somebody buy a first-time house? Yes, but you have to adjust what is a first-time house. I talked with a young couple. They make a very good salary, have very limited debt, and they started talking to me and said, well, we're going to try and stay below $1 million. And I went, you've never owned a house. We're not going to buy $1 million house as your first house. Why? You don't know how to take care of a house. I'm not going to put you in something that could not. Let's look at a 2-year house.
Right.
Oh, okay. Well, how about 800? And I went, let's try 4. Okay. They're like, oh. I'm like, let's try 4, save up. Then we can get a little equity that we can move in. So that's an extreme example. Then we have the young couple that comes in with lots of debt and says, oh, we want to buy a $500,000 house, but we can only afford a $250,000. We're not going to buy a house. And we have to sit down with them and go through, wait a minute, you still have to have a place to live. So you can go pay $2,500 a month in rent, or for that same thing, even with your debt, because you don't get any benefit from that, you still have to pay your student loan debt.
Right.
So now if we take that $2,500 and talk about all the tax benefits and the help that happens with appreciation, they start to go, oh. And then if, of course, they then go to mom and dad or grandparents, boomers, that may have a little more cash and say, hey, here's what we're thinking. It's amazing to me the number of parents that step up and go, oh, you need $25,000 for a down payment? Sure, no problem.
Nice.
Be a gift for y'all.
Yeah.
We're glad to see y'all finally coming around to our thought process.
Yeah.
I mean, it's an interesting thing. So what I encourage first-time homebuyers is to talk to us. Let us be the real estate advisor. Let us actually take you through. When you're people ask me all the time. You and I think actually had this conversation of, wait a minute, you're a tax attorney and you didn't leave the practice of law, but your primary business is a real estate company. Why would you do that?
Right.
Because obviously we took a pay cut to do it. I love what I do, but I could be a partner at a large law firm.
Sure.
I love what I do because I get to advise people, and I get to talk to them about the fact that you can make a huge impact in your family's life and in your wealth. The wealth of a homeowner versus a renter is about 50 times. 50 times. Wow. Just by owning a house. That doesn't mean you own $1 million house. You own your house.
Yeah.
So it's, there's a lot of different ways to look at it, but that's something that if being an advisor, we can take people through the process. Nice. And be creative.
That's fantastic. And you're also on the radio now. You're doing a segment on WRHI. Well, how long have you been doing that segment? The We're Bigger Than You Think?
We're Bigger Than You Think. I guess we're in our third year for We're Bigger Than You Think.
All right.
I did another one on real estate trends for a little over 10 years before.
Nice.
But this one is definitely geared toward what's happening today. We record every single week. We record on Tuesday or Wednesday, and it airs on Thursday.
Fantastic.
So it's very timely. It's something that we have gotten phenomenal feedback from. I can't tell you the number of times somebody will catch me out and go, "Oh, I listen to you every Thursday," because we again run during drive times.
Oh yeah.
So it's a great thing for a lot of people that listen to talk radio.
Oh, cool. Now, is the show title "We're Bigger Than You Think"? Is that a reference to the area or your stature?
Sure. I am 6'5", and I do weigh. I'm not going to tell you how much I weigh. So,
for the listener, Jay is 7.5 feet tall. He had to
So
it's his head to come in the door.
It's a combination of things. So it has a lot of different meanings. So number one, I was a little annoyed at people talking about the Carolinas because we don't always get the best rap.
Mm-hmm.
Okay, something about some Civil War and that sort of thing that people don't think we're as smart as we actually are. Also, a lot of times, people look at the Carolinas and go, "Oh, those little Carolinas."
Gotcha.
So it's definitely a nod to this area is bigger than you think, both physically and stature in the United States. The second thing is, we're a real estate company.
Yeah.
And a lot of people say, oh, you're just a boutique.
Right.
And we're not. We're part of the leading real estate companies of the world as far as a percentage of our agents that produce at a very high rate and make a good living doing real estate, which is tough in the United States. Nationally, out of the 1.7 million members, only 50,000 do more than 25 transactions a year.
Wow.
Okay, 25 transactions is that's a good amount, but it's not a huge amount.
Yeah.
Okay.
Yeah.
Only 50,000 in the entire country.
Yeah.
And out of our company, we'll have about more than half of our agents do that.
Wow.
So for percentages, we're bigger than you think. We can also provide support in about 70 different countries in the United States through our affiliates.
Very
So
cool.
it's kind of neat.
Awesome. Now, you alluded to the Panthers announcement earlier. You have any thoughts on what's going on with that whole deal?
That is one of the most interesting situations that I have probably ever read about.
Right, because you're looking at it from both a law perspective and a real estate perspective.
Yeah.
So, I mean, it's like
I guess
so
my first aha was I didn't realize that most of Mr. Tepper's money was made in the hedge fund on distressed debt.
Interesting.
So he knows what he is doing.
For sure.
Okay?
Yeah.
Now, I'm not saying he's doing it right. I'm not saying anything was intentional, nothing like that. But, I mean, the man knows what he's doing.
Right.
And he knows how to play this game and has played it to the point of billions of personal dollars. Now, to that extent, you also have a lot of the filings that the city of Rock Hill have done that have great timelines in them and have been done an exceptional job in laying out exactly what happened here.
Right.
And the fact that what the Tepper organization has done and put out in the media is not right. And so my hat's off to the city of Rock Hill in a lot of ways. I think they've done a good job in dealing with a difficult situation that was thrown in their lap. Gotcha. I think we have all learned a valuable lesson. We will treat this type of situation very differently in South Carolina. And I'm talking about the whole state.
Right.
If we are presented with something like this in the future, we've learned a lot.
Yeah.
And that institutional knowledge, I hope, never goes away. I hope that my grandchildren, they're able to step back and somebody goes, "Oh, I found this memo. We should ask these questions." Let's not just rely on what's being put in front of us. Let's read between the lines.
No, that's a good point. Yeah, it's going to be interesting the next time any kind of major franchise wants to move to the Carolinas, because it's going to be viewed with a lot more scrutiny, I think, than
and I think
sort of celebration that we gave this originally.
Oh yeah, and it's not just this was so public with the franchise, but I think we're going to have it with really big announcements of corporations.
Yeah,
I think the Department of Commerce is going to look a little differently at some of these things. Although our two largest ones have turned out absolutely wonderful with BMW and what it's done for the state, and then Boeing.
Yep.
So as I look at that, it's interesting. I also have an interesting perspective because my son's studied economic development, and he's working with the community college system, the tech college system in South Carolina, and so he has some very definitive opinions that he and I get to debate.
Okay,
that's cool to have a little bit inside somebody working inside that can debate me on these things.
Right. Now, Jay, with your breadth of experience in all of these areas, you've never run for any sort of office, have you?
No.
Do you intend to? Does that idea intrigue you at all?
Yeah, you're very kind. I think I started earlier saying I like what I do and I really love it.
Yeah.
The political climate right now is toxic.
Yeah, it is.
And that is something I've never wanted to jump into.
Right.
At times I have said, boy, wouldn't it be nice? That's certainly your ego talking. My ego seems to be fully intact right this minute.
Yeah.
And while I wish there were ways for good people to step up and make a difference, I appreciate what Ralph Norman's done. Ralph, he doesn't have to do what he does.
Yeah.
And my hat's off to him for going to Washington and representing us. but I'm sure somebody listening to this podcast is going to go, I can't believe he even mentions Ralph's name, you know? So on the other hand, I'll see John Geddes all the time, and I tell John, I'm like, dude, wow, anything I can do to help you, you know, because John, just the position of being a medium town-sized mayor, not easy, especially dealing with something that the nation is looking at in the Panthers deal. So, no, long story short, not interested.
Spoken like a great would-be politician. That's good. Awesome. Well, do you have any other final thoughts for us? Anything else you'd like to talk about or let people know where they can follow you?
Yeah. So one of the things, you know, certainly I would say is don't always listen to the national headlines with regard to real estate.
Yeah.
Real estate is massively hyper-local. So something can be happening in the neighborhood right beside you or the neighborhood you want to move into.
Right.
With increases in prices, that if you listen to the national news, you're coming in and saying, well, I know that house is on the market for $250. I want to offer $200,000. You're not going to buy the house. So listen to your real estate advisor. And also, you know, for most realtors, goes for us in our company, we'll be glad to sit down and talk with somebody.
Yeah.
So go ahead and get the advice. Talk to them. Really good brokers will spend that time with you because they want you to make a good decision, one, in this transaction, because they're not looking for you to be a one-off transaction. They want to have a relationship and a long-term relationship. So, and for us, as far as contact, you know, ReinehartRealty.com is our main website. Pretty much, if you type ReinehartRealty.anything, you're going to get me. We've gone on a buying spree over the last 10 years to make sure that we own that domain. So,
fantastic.
In a lot of ways, you can contact us there. Follow us on social media. Rinehart Realty, we have a lot of posting that we do on Facebook. We have a couple of different Facebook channels, relocation if you're interested in different parts of the United States. And then we also have Rinehart Property Management for individuals that have to get into the market for a short-term rental, maybe a year, or if they have investment property that they want to have some professional management for.
So awesome.
Yeah.
Well, thank you so much for talking to us today. It's been a pleasure.
Yeah.
Thank you for having me on.
Thank you very much. Thanks for joining us on this edition of the Bandit Room. Please feel free to rate, comment, subscribe, and share. Follow us on social media. And stick around to see what we say next week on the Bandit Room. Thank you very much.
The Bandit Room is a production of Span Enterprises, located in sunny Rock Hill, South Carolina. We've been developing, supporting, and growing successful IRS e-filing and business management solutions since 2010. Go to spanenterprises.com now to learn more. The views and opinions expressed in the Bandit Room are those of the guests, and do not necessarily reflect or state the opinions of Span Enterprises. No information should be considered as tax, legal, or other professional advice.